As an individual and a small business owner, you are familiar with the tax system. As a childcare business owner, you understand the necessity to maximize every dollar to put back into your program to improve the lives of children, your staff, and yourself so that you can continue to provide services that the country depends on. There may be some goals in your agenda, such as offering staff benefits or performing home improvements to boost your program's quality, but you may believe that these items are cost prohibitive. However, there are tax credits that you can benefit from as you implement certain benefits and improvements within your childcare business. Tax credits are a useful tax-saving tool as they offer dollar-for-dollar reductions in your tax liability. Today, we will discuss some key tax credits that childcare businesses can and should be sure to look into. The information contained here has been prepared by Civitas Strategies Early Start and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies Early Start team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information is not intended to create, and receipt does not constitute an attorney-client or any other advisory relationship. Reproduction of this information is expressly prohibited. However, this presentation should not be considered tax advice. Please consult with your tax preparer or accounting professional for specific guidance and information regarding depreciation of your business. Today, we'll go over the kinds of tax credits that may be available for you and your business. This includes pandemic-related tax credits for offering staff benefits, tax credits for hiring staff that belong to a targeted group, an employer-provided child care facilities and services tax credit, and tax credits for homeowners. The federal government offered tax credits for businesses who were impacted by the COVID-19 pandemic. The eligible period for the tax credits began March 13th of 2020, and businesses can still claim them retroactively. There are two tax credit programs still available. The Employee Retention Tax Credit allows eligible businesses that were impacted by the pandemic who continue to pay their W-2 employees to receive a credit of 50% in 2020 and 70% in 2021 for wages paid out to staff. The maximum credit for 2020 is $5,000 per employee and $21,000 per employee in 2021. Read our ERTC guide for more details on this valuable credit. The Families First Coronavirus Response Act allows sole proprietors and businesses with employees to receive reimbursement for paid sick leave that was offered to staff who were out for pandemic-related reasons. This also covers program closures due to COVID-19 exposures. Businesses can receive reimbursement for up to 40 hours of paid sick leave from March 13, 2020 to March 31st of 2021, and up to 40 hours from April 1st of 2021 to September 30th of the same year. Read our FFCRA guide for more details on this valuable credit. There are 3 tax credits available in response to offering staff benefits, including health insurance, retirement, and paid family and medical leave. These are the Small Business Health Care Tax Credit, the Setting Every Community Up for Retirement Enhancement, or the Secure Act, and the Employer Credit for Paid Family and Medical Leave. The Small Business Healthcare Tax Credit will reimburse you for half of your contributions toward your employees' premiums as long as you cover at least 50% or more per employee. There are other guidelines that you must meet, which in most cases a typical small to mid-sized childcare business would. For more information, visit the Small Business Health Options Program website to find an example of starting costs for healthcare insurance plans. It's important to remember that these figures do not include dependents, and costs can be much greater than those estimated on the site depending on your individual circumstances. Small businesses that start up a retirement plan can benefit from the Secure Act tax credit. Eligible employers may be able to claim a tax credit of up to $5,000 for 3 years for the setup and administrative fees associated with starting a SEP, Simple IRA, or 401k plan. Be sure to talk with your tax professional about this tax credit opportunity. Employers may claim the employer credit for paid family and medical leave, which is equal to a percentage of wages they pay to qualifying employees while they're on family and medical leave. This credit is available through 2025. The credit that the business receives is based on the percentage of wages that you pay the employee while on leave, ranging from 12.5% to 25%. Some examples of qualified leave include the birth of an employee's child or to care for the child, to care for a service member who is the employee's spouse, child, parent, or next of kin, to care for the employee's spouse, child, or parent who has a serious health condition. Businesses can receive a tax credit for hiring staff that belong to specific targeted groups. Historically, those in the targeted groups have faced employment barriers, and by employing them, you are helping to alleviate those barriers and contribute towards their economic stability. This credit is only for new hires, and you must request and receive certification that the person belongs to a targeted group. To qualify for the credit, you must complete Form 8850, which is the request for certification. After both you and your employee sign the form, you will send it to your state's workforce agency by the 28th day following the hiring. The credit ranges from $1,200 to $9,600, depending on the target group the employee belongs to. Some members of a targeted group include long-term family assistance recipient, qualified recipient of temporary assistance for needy families, qualified veteran, or qualified ex-felon. The federal government has offered a tax credit to encourage businesses to offer child care benefits to their employees. The employer-provided child care facilities and services credit allows businesses to receive a tax credit of 25% of related child care expenses and 10% of their resource and referral expenses, up to a total of $150,000. To be eligible for this credit, a business has the following options for offering employer-provided child care: providing on-site care for employees, including expenses to acquire, construct, rehabilitate, or expand a property to provide childcare to employees, as well as qualified operating expenses for services. Contract with a childcare program, including expenses needed to contract with a qualified childcare facility that will provide childcare services to the children of employees. Contracting for research and referral, including the costs to contract with an entity who will provide research and referral services to help employees find childcare. If a childcare business seeks to claim this tax credit for service offered to its own employees, then at least 30% of enrolled children must be employees' dependents. To support clean energy, the Inflation Reduction Act will extend and expand tax credits for certain energy-related home improvements, including energy-efficient solar panels, water heaters, windows, and other appliances. Starting in 2023, the energy-efficient home improvement credit will be equal to 30% of total energy-efficient improvement costs made throughout the year, up to a maximum credit of $1,200. The Residential Clean Energy Credit offers a 30% credit on the cost to install certain systems that use solar, wind, geothermal, biomass, or fuel cell power to power your home, heat water, or regulate the temperature in your home. Be sure to talk with your CPA or tax professional about how these can work for your business. You also have access to speak with a free business coach at www.childcare.texas.gov to answer your questions.